Hello traders, welcome to the weekly Forex analysis for the week of July 22nd to 26th. In this video, we'll go over the currency pairs EURUSD, USDCAD, Australian and New Zealand dollars against USD, Swiss franc and pound against USD. So let's start with the first pair, which is EURUSD. And in front of you can see the chart from the last week. There are too many lines here, but let me clear up a little bit. Starting with the weekly forecast, we have seen that we have discussed this in the previous videos that the price has been moving down, and we have seen some consolidation here. Though the downtrend has stopped, but this consolidation has been going on for several weeks, all this time period since April, May, June, until now this month. So we have seen this consolidation, and we were expecting some price movement here, but as you know, the European Bank and the US Federal Reserve, they are both trying to cut down on the interest rates. They have soft stance on their currencies, so we are not seeing much movement on this pair. Though we had forecasted here last week, as you can see these lines, the price was here, and our expectation was the price would go up to 61.8% retracement, although it did not reach to that level, but we did see the price movement going up, and then it was going down to this level. So as we forecasted, the price had moved in the past week. Now the expectation is the price would go up, and that's a long term. It's not going to happen within a week or so. This is the long term forecast that the price would reach to this level. Though we have seen that, you know, this area around, let me draw this little rectangle here, that this area around 112 is the area that's been supported heavily in the past. Not only here, but we have seen this trend, the support here in the past, and you know, it was acting as a resistance when the price fell below 112. So the expectation is that the buyers are there below this price, and they will jump in as soon as the price comes down to this level. But with this weekly rate decision from the European Bank, if they cut down further on the interest rates, then the price may break this level, and we have to be very cautious for that movement. The price can fall to 111.50 or even below to 110. So this is the area where we have to be very careful. If you see the price moves up, but this 50-day moving average is catching up with that, and the price, you see some reversal candles forming here around that time when the interest rate decision is made, then you want to stay away from this trade and close your positions, and look for the price movement action after that. It may go upward or it may break this level of 1.12. So next 3 to 4 days you have to be very careful. You can see some action on the price here, maybe 40 to 50 pips going up and down between 112 and 112.60, maybe 70, 75. That's the current range in which the price is going to move in the coming days. And after that, it really depends on the interest rates, if the price will go up or go down. Based on that, you're going to make your decision on the trade. So be careful with this pair, and do not start with a very big position. Okay, that's for the Euro USD for this week. Now let's move on to USDCAD. On this pair, we had discussed last week that the price is expected to go to 61.8% retracement, and then by the time this 50-day moving average will catch up with that, we are expecting that the sellers would come in and push the price downward, and our target is 400 to 500 pips all the way down to 127.50 or below. but that's a very long term. In the past week, we did not see the price going up, although it went up to 131 level, but considering Friday being end of the week, I think the traders were taking profit here and they sold their wanted to close their positions. So we saw this type of candle there last Friday. This week, my expectation is that there is not much on the news end. So if we see some more consolidation here, if we break above this red line, which is pushing the price downward, if the price breaks above that, then it has a chance to go up to 132. 132 level, where we are expecting to open our sell position, sell orders, and get into a long-term trade for the price to go down. But you may see the consolidation happening here in the coming days, and I would suggest you to stay away from this pair unless it breaks above this moving average, and that's currently set up as at the level 130.75. If it breaks above that and stays above that on a daily chart, I would say above 131, that's the area where you want to enter into a buy trade for short term, like day traders, and they can take advantage of about 70 to 80 pips for the price to freely move up to 132 level. And once it reaches there, we'll close our positions and open the sell trade for the long term. So this is for the upcoming week for this pair, USDCAD. Now Australian dollar against USD. On this pair, as we forecasted last week, the price moved exactly in the same manner. We were saying we have identified the ABC pattern here. The price went up 200 pips here, then there was a retracement, and then the price action was going up, upward. And here we have seen the prices staying above the 50-day moving average. So this is still valid, this trend, and you may see the price continue to go up to this level, which was identified previously, currently set up as 0.7120. And that's the target where you want to close your positions. If it does not reach there, I would say set your profits accordingly around this 0.71 range, because sometimes price does not reach to exactly as forecasted, and if you have set your targets to, like, you can lose your trade by 15-20 pips. So set your profits accordingly, but this is the area where we want to close our positions, and then we'll reevaluate. But if I look at this on a weekly trend, and it makes sense here because you have seen that this weekly we have 50-day moving average, which is pushing the price downward every time it reaches there, and this is the area exactly where we are expecting the price to go up, and then we'll see the sellers will come in and start pushing the price downward, unless things change, like US interest rates are cut and then some big news come out of this Australian bank, Royal Bank of Australia, then we'll see some different kind of analysis. But at this moment, for the coming week, our target is to close our position around 0.7120. And also please keep an eye on this RSI, which went up to 70, and this may go up again when the price goes up to 0.71. You will see the RSI is going up to 80, and that's the area where you want to open your sell orders, and then we'll see the price coming down. Now let's move on to New Zealand dollar. Here the same thing, like Australian dollar, we have seen the same trend as forecasted last week. You can see the price has been moving along this line that I had put here on this trend, and sometimes you see there are some red candles, so there is a some retracement happens during the week, and then the buyers come in and push the price upward. So some people put their stop losses very tightly and they lose the trade. So you have to keep the stop loss a little bit below the previous day high. So when price comes down, it reaches close any gap and then it goes upward. So you have to be careful that your stop loss is not triggered easily. Most of the brokers and the big banks, they are trying to hit the stop losses for individual traders, and that's how the traders lose money. The individual traders, they lose money that way. So be careful with that. But here we have seen that the price went up 220 pips and then retraced back, and then this was the expectation for the price to reach up to 0.68. Although it had reached to 0.6790 level on Friday, 92, and then it's going down. However, I do see that the price will still go up to 0.68 or a little bit higher, and then by the time it reaches to let me see here, by the time it reaches to this red line, which is a downward trend, that's where I'm expecting the sellers to come in and start pushing the price downward. Now on this one, you also see the RSI had reached to 80 almost here, then it went down, and now we're expecting the RSI to again go up. And if it reaches at 80 and you see the price is close to 0.68 or above that, then you must close your buy orders that you entered here around 0.665 or 67. Take your profits and then open your sell orders for the price to come down. And the initial target would be 0.6750 with extension to 0.67. That's where we are expecting these moving averages to catch up with the price. And if I look at the number of pips, there is a chance to make about 80 to 100 pips easily. So we are all looking forward to that kind of trade for profit. Now let's move on to the Swiss franc. Here you see the price did move according to our analysis. It went up, although these were reversal candles, so that was a signal here. If you look at this candle, we started the week here. There were some price went down, but the buyers pushed back it up. The next day it went up to this level, and then we have seen it went further up, and it almost reached to the level where we had forecasted the price to reach, and then it made this reversal candle. So this was the signal to close your buy trade and open into a sell trade. And the next day we have seen the price fell down, and then again another inverted hammer, which is a signal for the price to go down. So we are expecting this downward price forecast to complete. As we go into the week, we'll see if the price goes up to these moving averages, the red line and this white line for 50-day moving average, it should be again rejected from there, and the price should go further downward. So that is for the Swiss franc, and the target for this in the long term is to reach to 0.97, 0.9730, and that's where we'll analyze this pair again. Next one is the pound USD, and this pair has been very tricky. Not only because of this Brexit deal going on, but because the major banks, they are playing the role in the price movement action here. In the weekly chart, what we have seen in the past is that the price is supported at 1.25 level, but last couple of weeks we have seen that this has been broken and price went up. However, on the weekly chart, we have seen the price closed above 1.25. So considering that I'm not expecting the price to make a huge movement here upward until there is some deal coming out of Brexit or the interest rates are cut in the US. But this is going to be in this range around 124.50 to 125.50. It will continue to do some consolidation. However, if you see the price is breaking above this previous highs of 125.50, then it can go up in the extension to 126 or 126.50. But that's it. It's not going further beyond that level because there has been too much noise here around 127 level, and this will act as a strong resistance. So that is for the pound USD, and I really hope you guys listen to my watch my videos and they help you make decision with your trading. And if you like my videos, please subscribe to my channel and please leave your feedback in the comment section. Thank you so much for watching.